This is Radio 3.
Good morning, it's 8:03 in Hong Kong on Monday the 14th of February. Happy Valentine's Day. This is Peter Lewis with today's business headlines for you right here on Money Talk on Radio 3. Not much good news, I'm afraid, though. The number of new COVID infections in Hong Kong have topped 1,000 for the third day in a row. In the US, the University of Michigan Consumer Sentiment Index for February unexpectedly dropped to an 11-year low. Bad financial times over the next 5 years were anticipated by nearly two-thirds of all consumers, representing the weakest long-term outlook in the past decade, according to the university's report. The UK economy saw its fastest growth since 1941 last year as the country eased social distancing measures. The UK economy grew 7.5% in 2021.
Money Talk on RTHK Radio 3.
It's 8:25 and on the phone is Shanghai-based independent economist Andy Xie. Morning, Andy.
Good morning.
Let me ask you about those credit numbers that came out of China last week. We saw a record aggregate financing of about $1 trillion US dollars. We also saw a record amount of new bank loans in the month as well. What are the implications of that? Is it a sign that the authorities are very worried about the economy?
Well, I think the government policy is to try to sustain stability in the property sector. The properties are not selling like before. Obviously, a lot of developers are on the verge of going bankrupt. And the government wants all the ongoing projects to be completed, not to become like unfinished buildings like 20 years ago. So they're encouraging these projects to be finished, to be transferred to other companies, and the leverage limits don't apply anymore. So you have money needed for completing projects on the other side. You're not selling. So obviously, you needed to increase loans.
So that's where most of these loans are going. They're going to these property companies, which suggests they're not getting through to maybe the smaller businesses, the micro businesses that really need help at the moment.
Well, the government talks about SME lendings all the time, but the truth is that small companies don't get financing credit from the formal financial system. It's the same everywhere else.
And they create 80% of the jobs on the mainland. So presumably that's a problem for economic growth going forward.
Yeah, I think that it's a much more demand issue than a supply side issue. And I understand that the government likes to talk about supply side problems, but China is much more about the demand side problem. The household sector demand is weak because the debt level is very high. And that is due to the property bubble. And also we know that a lot of costs, like education, still very expensive. But the most important thing is that the household sector is being weighed down by that. So consumption is not really growing much. Now, on the other side, on the investment side, you have the property sector in distress. That is a big chunk of the investment story. So what you have is that you have investment and consumption, both are weak. So the whole thing depends on export.
And is that holding up?
Yeah, I think so far. I think that during this pandemic, we see that people elsewhere are okay with the Chinese working for them. That was a question when the trade war started, but it looks like people are happy that if Chinese want to work hard for very little money, let them do it. So if the global economy holds up, Chinese exports will rise. So this year, I expect the exports to rise by close to 10%. It's kind of a nominal value, twice. It's higher than the global GDP growth in nominal terms.
But it's not good, really, is it, for the rebalancing of China's economy, which the authorities keep saying they want to do? This is sort of like going back to the old model, isn't it? Relying on export growth, good for the manufacturing sector, not good for the services sector, and not good for consumption.
Yeah, I think that balancing has been is kind of like a slogan. It's been mentioned for like 20 years. I think that the government really doesn't mean it. I think the issue is that the government wants more resources under its control for its agenda. that's the reason why property bubble happened, because it was good for government to cover. So I think that the issue is that the government wants to control the economy and giving more money to the people to spend. If you rebalance the economy, that means the economy runs on its own, which I'm not sure is what the government wants.
What do you make of these 33 Chinese entities, mainly high-tech manufacturers, that were added to Washington's unverified list last week? What impact has that had on the tech sector in China, or will have on the tech sector?
Well, I think the U.S. wants to cut Chinese companies off from its high-tech sector. That is an ongoing policy. Its main purpose is to slow down Chinese companies. In the short term, it does have an impact. You look at what happened to Huawei. It's a mobile phone business, basically, has kind of collapsed. But the issue is that the high-tech, really the bit that China cannot make is not that important. It's important for mobile phones because they require small chips. But for most products like automobile, like telecommunication equipment, the space is not a constraint. So the chips from 10 years ago are good enough. I think that the impact is limited over time.
Andy, thanks very much indeed. Great to talk to you. That's Shanghai-based independent economist Andy Xie.
You're listening to Money Talk on RTHK Radio 3.